Hello everyone and welcome to another edition of the Forex Technical Market Update for Monday, March 21st, 2016. I hope everyone enjoyed their weekend and they are doing well. Now, what I have in front of us is a chart of the US dollar index. What we're going to do in this video, we're going to analyze the markets, the different currencies, to see exactly what is happening in the markets. And we're also going to speak about when to trade and when not to trade. There is a perception out there amongst traders that you have to be trading all the time. You have to be in the markets all the time. You need to trade. But in terms of making money in the markets, you need to know when to trade and when not to trade. When the odds, you need to be able to identify when the odds are in your favor and when the odds aren't in your favor. So we're going to speak briefly about that. But what we have in front of us here is a chart of the US dollar index, and the dollar index has been moving sideways for the last couple of months. And let me just reiterate or bring your attention to the US dollar index once again, because we have the index channeling essentially for so many months. Let's take a look. The market topped out in March 2015. It's 2015 here. March 2015, market channel and has been in a broad channel for over a year. So we're currently in March 2016. And it's very unusual to see the US dollar index move sideways for this long. Now, I'm anticipating that if the market breaks, it will break fairly strong. And we could get a strong move to the downside or a strong move to the upside if the market really breaks out. Because in technical analysis, the longer the consolidation period normally is, the more violent we have a breakout, and the longer duration the breakout lasts. So that's what I'm seeing here. Now, if this market does break out, does it have to break out violently, and does it have to move down or up a lot? The answer is no. There's no 100% rule in the markets. I'm just going to tell you what is more likely to happen, or what the odds are will happen. And I'm not sitting here telling you certainly what will happen. And it's when folks start to believe in this thing is certain to happen, that's when they risk too much of their equity in the market, and they begin to lose money in the forex markets, or in just about every market. So it's not a certainty. It's just, I'm just telling you what the rule is, and an observation of looking at these markets for years and years and years. Okay, taking a look at the euro versus the US dollar, similar channel situation. I know it has been frustrating to many, especially trend following traders, that the market has just been channeling for so long. But again, until we get a strong breakout in this market, it's difficult to say where the euro is going to go. I'm not going to say, okay, the euro is definitely going up or it's definitely going down. It's just difficult to say at this point in time, and we're looking for the breakout. Now, as a good trader and as a good investor, what we need to do is prepare ourselves for the breakout. Because when the market does break out, we have to know how to react, how to act, how to move, and how we'll play the situation so that money can be made in the markets. Okay, so taking a look at the euro, still in a broad channel, similar chart to the US dollar index, but to the reverse. Looking at the British pound, it's not in a channel. The British pound has been moving down in a strong downtrend over the last couple of months, and we have a retracement here, and this market could continue trending down, or we could start to see the beginning of a turnaround in the British pound. If this high just above 146.50 to 147 is broken, we could be at the start of a turnaround in this market, and maybe we will see a series of higher highs and higher lows. That waits to be seen with the British pound. Taking a look at the Canadian dollar market essentially has been down for the last, or the Canadian dollar has been strengthening for the last 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks in a row. The Canadian dollar has been strengthening, so we could see a turnaround situation coming up shortly. Keep in mind that this market is currently trading just at the 618 retracement level of the move from the huge move from 120 to 140, 146.84, and we're just at the 618 retracement level right here in the USD Canadian dollar. So we could see some buyers come into the market at this point. And if that does happen, we could see a broader bottoming posture in the Canadian dollar. We may in the USD Canadian dollar, and we could get a move to the upside by a couple hundred pips. If the market does break below this low of 128.32, that could have the markets decline even further, and we could see further losses down to the 125.23 level. Taking a look at the Japanese yen, we're in a consolidation pattern at this point in time. The market, ever since the market broke down below critical support in the 116 region, we have seen the market stall out. We've seen the market stall out, and we see a triangular situation. And this market could, again, the rule is the market entered in a downtrend. We could see consolidation and then a move back to the downside in the USD Japanese yen. That probably happens, I will say, this is not a scientific study, I will say probably about 70% of the time that scenario would happen. And maybe another 30% of the time the market will actually break to the upside. So that is the probability. And when I deal with coaching clients, one of the big things that I try to get folks to understand is that trading the markets is a game of probabilities. There is no 100% something will happen, and folks sometimes do not understand probabilities. I may say something could happen 90% of the time. That does not mean 90% of the time simply means 9 out of 10 times a event can occur, but 1 in 10 the reverse can occur. So if you put on 100 trades and I say it has 90% accuracy, 90 trades could go in your way and 10 could not go in your way or would not go in your way. But that is what a probability is. It's not 100% certainty. And traders sometimes trade like markets are 100% certain. And that causes them essentially to risk too much of their portfolio on any one trade. Yes, that is a theme you will hear me say over and over again, because it's one of the biggest mistakes I see traders do. Funny thing is, I used to offer trading signals where I will email signals out to folks. And let's say I email, and this is why I don't do this anymore. Let's say I email 10 signals out. And folks, I can tell you, would not get the full benefit of the 10 signals. Because let's say signal 1 comes out and it's a winner. They take that trade, it's a winner. Signal 2 is a loser. Signal 3 is a loser. So winner, loser, loser. Signal 4 is a loser. Signal 5 is a winner. What I would find is that most folks, after 3 losers in a row probably won't take the other trade that would turn out to be a winner because they get scared. And what I would find also is that folks were risking too much on they may see a trade going their way, and then they start to risk 5, 10, 15% of their portfolio. If you risk 10% of your portfolio on these 3 losing trades and you are down 30%, and then when the winning trade, you either miss or skip the winning trade or risk too little on a winning trade. Say you risk 1%, you will still be down. While someone else, let me just clean this up. Someone else who probably was risking. Okay, let's put the trades again. 1, 2, 3, 4. Let's keep it at 5 trades, not 6. So 5 trades. And this is an excellent lesson. Say this trade is a 2-to-1 winner. 2-to-1. Meaning for every 1% we risk, we get 2. This is a 2-to-1 winner. This is a loser. This is a loser. This is a loser. This is a winner also by 2-to-1. 2-to-1. Okay, so if you took all 3 of these trades, essentially you'll have a 2-to-1. So you'll have +2, -1, -1, -1, +2. So that's +4 -3 equal net positive of +1 if you took all these trades. And let's say you risk 1% of your portfolio on every trade, you'll be +1. But what I found with the signals is that folks will take the first trade. Let's say they risk 1% on the first trade and they get overconfident, and the second trade they risk 4%. And then the third trade they say, okay, that's just not going well, but it's probably just an anomaly. To make it up, let me risk 5%. So they risk +4, 5%. And then the other trade, they may risk 2%. So those 3 losing trades, they lost 4%, 5%, and 2%, 11%. So even if they took the other trade that was a 2-to-1 winner and they risk 2% or so, they still would not make back their money. And that was one of the big things when it came to sending out signals. Folks just wouldn't follow the risk management rules. Folks wouldn't take the trades, and that's why sending out email signals, I have essentially never seen anyone make money just following email signals, because they start to doubt the system, not take the trades, risk too much, miss trades, and then they say to you that the system is no good. It's not that the system is no good, it's that you are not applying the system properly and you're not taking the trades and using proper risk management. So I was just clearing up a question that I receive a lot. Why not email trades out? And that's why I do not email signals out again. And obviously the fact that some folks, you send an email, they don't receive the email on time. They may receive the email 3 hours later and the market has moved up 300 pips or so. So emailing trades out is definitely a loser's prospect, and it's just almost impossible to make money like that. Let me just quickly, that explanation took a bit longer than I thought. Let me just quickly move on to where I see some markets pulling back nicely. And let me just highlight the euro versus the Canadian dollar. We see the euro versus Canadian dollar here. The market pulled back to the 786 retracement level here. And we're seeing signs that this market could be turning positive. We had a huge candlestick buy signal here. Market pulled back shortly. So this is a market I want to track over the next couple of months to see, okay, will the market start to move to the upside and we could probably see a move up to the 154, even the 158 level. That would be over 1,000 pips from here. So we're going to keep an eye out on this euro versus Canadian dollar market with the Forex market. Some quick announcements. I have a one indicator email going out, and people often ask me what is the importance of that email or that one indicator. Essentially, it started to put me on the right side of the market. It's something that took years for me to realize, but once I realized it, it essentially changed the way how I trade and how I look at that how I look at markets. So that's something you can check out. You should see it in your email about the one indicator. Also, another announcement, I will be hosting a webinar later this week. I believe it will be on Thursday, so you can keep an eye out on that. It will be a Thursday at we'll finalize the time. It will be either 7 p.m. or 8 p.m. Eastern. Probably we'll do 7 p.m. on Thursday. So keep an eye out on that for that webinar. It's a very good webinar, a brand new webinar with brand new stuff in it. So keep an eye out for an email for an invitation for that. That's it for this market update. It's good to continue listening to you guys and feeling your questions that we receive. If you have any questions, you can send it into info@acestrading.com. Thank you very much for listening, and I hope you have a good trading week.